Hello and welcome. This video will be focused on a company analysis of Alibaba, one of the world's largest online and mobile commerce companies. Today, I'll share with you some of the interesting things I noticed when doing my investment research. What I share is in no way financial advice and only for educational and entertainment purposes. Let's dive in. China has been the most rapidly growing economy in the world for the past 25 years, with good reason to believe it will continue to be a strong market over the next 10 years. Their economic reform has lifted over 800 million people out of poverty, which is truly incredible for the people of China. As the middle-class population grows, there is an increasing desire for international brands. Alibaba has been crucial in introducing overseas brands to their country. China maintains the world's largest online retail market, much larger than the online retail market in the US. The Alibaba Group is a Chinese e-commerce company established in 1999 with company headquarters in the eastern province of Zhejiang. Alibaba operates China's online marketplaces, including Taobao, consumer-to-consumer, and Tmall, business-to-consumer. Alibaba's commerce retail division is the largest contributor to their revenue, with Taobao generating revenue through advertising and merchant data services and Tmall deriving revenue from commission fees. Additional revenue sources include wholesale commerce, international commerce marketplaces, cloud computing, digital media and entertainment platforms, logistics services, and innovation initiatives. So why does China love Alibaba? 1. Alibaba solves problems for the masses. Prior to their platform, small Chinese entrepreneurs didn't have other forms of support to start and grow their business. 2. The value proposition for sellers is to allow their dreams to come true by having access to a global marketplace. 3. Alibaba was born digitally native with the mentality of algorithms to its core. They continuously invest and experiment with virtually all new technologies, AI, big data, blockchain, and more. Another indication which can help determine a strong competitive advantage is by looking at the financial growth rates over time. A low or declining growth rate could indicate their competitive advantage has been compromised. Over the last 10 years, Alibaba's financials have been consistent and strong, all indicators of a wonderful business with a durable competitive advantage. Book value has grown on average 33%. Earnings per share has grown on average 15%. Free cash has grown on average 32%, and revenue has grown on average of 47%. Daniel Zhang is a Chinese technology executive. He is currently the CEO of Alibaba Group. Before becoming the CEO, Zhang was best known for his roles as CEOs of Taobao and president of Tmall. One of my favorite ways to get a feeling for the management team is by reading their annual letters and watching YouTube interviews of them. I am looking for signs of integrity or lack thereof. Another way we can understand the performance of management is by looking at their company financials. The first thing I look for is company debt. Alibaba could clear its debt in less than 1 year of earnings. This is great. Another way I like to understand the performance of management is through their efficiency to reinvest capital for growth. By no means does past performance predict future growth, but by studying historic performance, it gives me an insight into how well the management team are operating the business. Alibaba has delivered an average of 23% return on capital invested over 10 years. This has slightly declined in the last year to 16%, but I believe this is only due to the size of Alibaba. As a company gets larger, it becomes increasingly harder to allocate enough capital sensibly to maintain high returns. For me, Alibaba's consistent high level of return on its invested capital gives me confidence that management are reinvesting earnings effectively. This can indicate a long-term compounding business. Fantastic! The next part of my company analysis is to calculate Alibaba's intrinsic value. To do so, I calculate an average growth rate from my earlier financial research. I then cross-reference this with industry analysts. I like to be on the side of caution, and whilst analysts predict a 15.5% growth rate, I prefer a more conservative 14%. It gives me a little bit more room for error while I am learning to invest. I then used a discounted cash flow analysis to estimate the value of an investment based on its expected future cash flows. Overall, my valuation of Alibaba's intrinsic value is somewhere in the region of $200 to $215 per share. I would love to hear from other investors regarding their own methods and results for valuing Alibaba, so leave a comment below. That being said, I do have some concerns. The Chinese Communist Party are clearer rethinking their approach to overseas listings. Other Chinese companies have been delisted from U.S. exchanges, which has fueled the fear in the marketplace. My next concern is the widespread regulatory crackdown by Beijing as President Xi Jinping has tightened his control over the world's second-largest economy. It seems they want closer control of these large Chinese businesses. Whilst I think this is true, I don't believe it is in their interest to destroy Alibaba. Lastly, recent figures have suggested China's economy might be slowing. But slowing does not mean that there is still not an opportunity for growth. The underlying financials of Alibaba are positive. That gives me confidence that they will continue to capture that growth in China and internationally. Further to this, Alibaba has several emerging areas which are not yet profitable. When critical mass is achieved, these profitable revenue streams will provide incremental profit to the bottom line. I am particularly excited about cloud computing. Here are my final 3 takeaways. Number 1. By my calculations, the current market price is undervaluing this business. There is upside opportunity. Number 2. Alibaba has strong underlying financial fundamentals and the characteristics which demonstrate a potential long-term compounder. Number 3. I believe that once their non-profitable additional revenue streams hit critical mass, they could provide additional upside opportunity. Thanks for listening and have fun out there.